Those overnight sessions about our market today, because SPI says flat, so where's the interest factor going to be?
Brooke, that's exactly right. I think we're expecting a pretty flat start this morning, despite seeing a bit of a rally in European shares, although, as you say, we did see those US shares pulling back some of the earlier gains late in their trade. So we ended up seeing most of those indices closing lower. So unfortunately, we do have a bit of a mixed lead this morning. It does look like it's been a bit of a continuing theme this week, where we've opened up in pretty flat territory ahead of a lot of the economic data that we've received out this week. But unfortunately, on today's market, it is actually going to be fairly quiet in terms of that economic data, so I don't think there will be much driving our market apart from those leads that we have received. But as you say, I think it is expecting to be a pretty flat start. Yesterday, unfortunately, we did pare back a lot of the gains that we did see earlier in the week, and I think that's reflecting a little bit of nervousness and a lack of confidence from investors. So coming into the start of today's trade, we are actually up about 0.1% for the week, so it will be interesting to see how we go today. I think some of the ones we'll be looking out for today in terms of the better performers may in fact be some of those yielding stocks. So we have seen the telcos as well as healthcare stocks performing quite well this week. I think the discretionary ones will also be one to be looking out for, particularly after that retail sales data yesterday. But that materials sector, as we did see that iron ore price slumping overnight, and of course spot gold falling off, I think that will come under pressure, and also that energy sector where we did see some falls over in the US, and of course that oil price coming off as well. But as I said, I think it's going to be a fairly quiet day on the market, and certainly expecting a flat start.
Okay, Leanne, we've talked a lot about this morning the ECB stimulus. I think the package altogether was probably bigger than what markets were expecting. What's ultimately the impact here? What are you expecting in terms of a long-term impact on share markets?
Brooke, I think it will probably be positive long term. I think we really needed to see something coming through from the Eurozone. Really, we know that there's been two broad themes. Firstly, the pace of recovery over there really has just been too slow, and of course that inflation rate is still too low and well below the ECB target. So I think we needed to see something coming through, and I think markets had the expectation that we would see this. If we have a look at the implication on the share market though, some of the other quantitative easing programs that we've seen introduced by the US Fed, the Bank of England and the Bank of Japan as well, we've seen average share market returns of about 24% since the GFC, when those quantitative easing programs were introduced. But we do need to remember that they were introduced in fairly depressed and severe market conditions. So I think the quantitative easing program that's been introduced by the ECB is probably going to be quite different. We are starting to see a slow recovery over in the Eurozone, and we have seen some of those European share markets pick up from the GFC lows. So I think any accompanying share market return that we do see could be much lower than that 24%. So I think the fact that European share markets do account for about 25% of global share markets, we certainly could see a bit of a flow-on effect if we do see a pickup in those share markets, and I think that will also have an impact on investor sentiment as well. So I certainly think long term it will have a positive impact, but obviously it is going to take time for that to flow through.
We should ask you as well about the iron ore price. I can't see many analysts finding a catalyst for any turnaround at this stage. What does it mean in terms of how the stocks are looking from a value perspective, the locally listed stocks?
Brooke, it's looking pretty uncertain at this stage in terms of that iron ore price, but I think we need to focus on those big iron ore players, so the BHPs, Rio, Fortescue as well, in terms of their increasing supply, their expansion plans, of course some of their cost cutting as well, and I think that's going to provide a bit of a cushioning effect in terms of that iron ore price continuing to slump. I think some of the higher cost producers, those ones that have high break-even costs, such as Atlas Iron, BC Iron, Mount Gibson, those stocks, I think they are the ones that are at most risk around that iron ore price falling off. There are some bearish analysts out there that do believe it's going to fall to around $80 a tonne, even lower than that, $75 a tonne. So a lot of those stocks have break-even prices around $80 and higher. So I think if we do see that iron ore price continuing to fall, those stocks are certainly going to be the ones coming under pressure. And of course we are continuing to see some steep discounting in a lot of those iron iron ore products as well, and that's on top of the weak iron ore prices. So that's really having an impact on those earnings of those higher cost producers. So I think the ones that we like at this stage are those lower risk, lower cost producers, the bigger iron ore players, but particularly Fortescue and Rio. Fortescue yesterday we saw having a very strong performance. It was up over 1%, even though we did see that iron ore price slumping, and I think the market's focusing on a lot of the underlying fundamentals within the company in terms of reducing their debt, reducing their costs and increasing their dividend payments as well, as opposed to focusing on that iron ore price falling off. So I certainly think those are the stocks to be focusing on, and they might not come under so much pressure as those higher cost producers.
Thanks very much, Leanne.